It is the last day of the year for trading, and I'll tell you what, we have a decent open. We'll have to see if we can hang on to it. I have a few things that I want to show you and share with you leading into 2025 that I think are absolutely worth checking out, at least as far as SPY and QQQ go. And we'll also give an update on Bitcoin, which is having a very nice recovery at the moment. And then also XRP, I'm going to update on that one as well. So we're going to jump right into the charts on this. We're going to kick things off with SPY. There we go. Put this chart up on the screen in front of you. And what I see when we look at this, we are still down below the 50. There we go. The 50 SMA that's on here for you. Let me make it nice and big on the screen. Even as the market in the early open here, we had a spinning top candle yesterday showing some indecision. Opening up here is a bullish thing. If you can hold it, need to break back up above that 593 is what we'll call it for that 50-day. Watching that blue 20-day come down this way is near-term bearishness. That would be watchful for. You can see we got that rejection before. That was going back to Tuesday and Thursday of last week. And so getting up on top of that 50 is critical. And then looking up above that to blue, would it be right around 600 as well, which gives that round number psychological resist. Really need to push up above that. Getting on top of 50 is going to be the first big thing. Watch for a rejection. If we get it, it could be intraday. It could be something that we just blast right through. Like I said, being that we're to the top side of the spinning top candle from yesterday is a very good thing. Let's move over into the Qs. By the way, I do want to backtrack a little bit to SPY. We'll get there in just a moment. Before the Qs, you can see we're in between the blue 20-day and the pink 50-day that's on my chart here in front of you. And let me put those technicals away for a moment here. Just looking at the moving averages, another spinning top candle for indecisiveness. And then today, still up above, a little bit of red candle forming. We need to push on to that 20-day right at around 524. Getting on top of that is going to be bullish. So looking at the RSI, for QQQ, we are just south of 50. We want to see that cross back up over in order to find that bullishness coming back to it. We could have a decent close to 2024. We're going to have to watch and see. Now, if we move out to a longer term chart on this, such as the monthly chart for SPY, what we see when we look at this, especially as we look at the momentum, is that we still have a decreasing momentum going all the way back to January 2018 to a peak in August of 21, and then a most recent peak that we have so far in November of 24. And those peaks that we have are descending while the prices are ascending. That's bearish divergence that we're looking at on the monthly chart. So really we're looking for, well, what happens when we break back down below that 70 line that we have on here that you might not be able to see. Let me stretch it out for you a little bit so that you can see it. There we go. So what happens when we break back down through that? Well, that could lead to a little bit of a corrective period that we want to be watchful for, and that could bring us back down closer to this 20 month. Now, mind you, if we make it down to the 20 month on the chart, that can be wildly bullish, that we want to be watchful for that as well. Now, that would be a significant sell from where we're at. That would bring with it a lot of pain. Nobody wants to see that happen. I will say, though, being on a monthly time frame, this could be something that happens throughout the next quarter, throughout the next year. We're just going to have to watch and see with the more near-term technicals that we have. To go to a weekly basis, we're already back into about 58 for the RSI. So you can see we've also almost come back to the 20-week that's on here as well. And we have come down from the peak that was right around 609, and we came all the way back down to 581. That's already a significant tumble that we have it coming back down to that part. Now, there is something else to pay attention to, and we can see it. I think the weekly chart might show it best to us. And let me put my technicals on screen. There we go. And that's this rising wedge pattern that we find ourselves in, that we're right back down near support. Now, mind you, we could spend several weeks heading back up. We really want to watch and see what happens right around 609 or 610. So hopefully we get back up there. Hopefully we push past it to where we can see some further upside before settling back down again. But it does seem as though as we hit this top trend line that we do sell off. Falling out of this, we fell out of it for the August the 5th carry trade. But other than that, we've stayed within this, or actually up above this support line that you will, that has been forming since the 23rd of, well, I should say since October 2023, since it's a weekly chart that we're looking at. It'd be the week that started on the 23rd of October, and it's been quite a rise since that time. So excellent to see that sort of movement. Rising wedge can be a bearish thing, but looking at a weekly chart, it could still be several weeks off before we see the next movement, which could involve some further upside. We want to see us fall out of this and then retest that support in order to have that pattern confirmed. You can see on the week of August the 5th that that confirmation never did take place for the rising wedge pattern. Now, mind you, the confirmation came along later that we had more touches. Let me see, 1, 2, and then the third touch didn't happen until we got to the first week of November. And then you can see we retested again in the first week of December, and then again in the second week of December. And now we're, let me see, 1, 2, the third touch that we had for this didn't come along until, you can either argue, the middle of December or even this week, as we're starting to form up this most recent candle on this weekly chart that we're looking at. So there are some reasons to be cautious out there. And when you look at it on a standard deviation basis, we are near that 2 standard deviation. Now, mind you, not up above it. So we're still within the usual prices, especially on a monthly chart where you'd be looking at, okay, what's happening with the bull run, and being up and kind of bouncing off that top 2 standard deviation line is something that's actually pretty darn normal to see. Now, let me see. I think I can show it to you here. We'll go back to the monthly chart so you can see exactly what I'm talking about. There we go. And I have this set to 2 standard deviations, and we'll take down my technicals so you can see a little bit clearer. This riding along the 2 standard deviation line that's up here from the Bollinger Bands, very typical of bull runs, and you can see it when you look past to more recent bull runs. You can see that we're on top of that, and dropping down below it is actually a pretty rare occurrence for the S&P 500, and it's usually a pretty painful time. Now, mind you, you can also see as we do dip down below it just how critical it is, first of all, to touch it, I should say, and then dipping down below it, checking that 200 month that's on here, which seems like a max pain sort of moment. We had it back in December 2018. The pandemic pushed down beneath it, and then that month closed up pretty much at it. The next month in April kind of dipped down below it, but you can see by the time we got that close, followed that nice bullish run that we have afterwards. So it's as we start to separate away from that 2 standard deviation part of this, like you could see here, where we start to get that rounding off, if you will. We don't quite see that yet. It could be happening now, or it could be happening over the next several months if it's going to happen. If instead we keep on riding up along it, that would tell us not yet, but we do have a fairly significant gap up above the 20-month. So over to the Qs, when we look at the monthly chart on this one, there we go. You can see that nice long top wick that we have here, which could be associated with some selling pressure, some bearishness that you would have. Maybe that's the thing that pushes us back down towards that 20 period. We're just going to have to watch and see what would the drivers be towards a sort of sell-off like that one. I mean, honestly, for the Qs, you could see some sort of sector rotation that I don't know that we'll necessarily expect. But I would say that the economic reports, that really labor market is going to be huge. Then inflation is also going to be huge. The two of those together, based on what the Fed can do with cutting the federal funds rate, and then also looking at, is inflation continuing to subside, or is it something that is holding steady for us? Unemployment, the labor market, is it getting less tight or more loose, however you want to say it, or is it something that's stabilizing for us? So things that would stave off any sort of recession, as a matter of fact, show economic strength. So you can toss GDP in there. Really, I think it's in the hands of the economic reports that we see through the month of January and February that are going to be really, really telling for what we can expect, at least in the near term. So I think that the emphasis is really going to go on to inflation and employment like it hasn't been for a while, at least not the two of them together. So I think that those reports, as they come out over the next 2-ish weeks, from here are going to be highly critical. By the way, I don't know if you can see this guy in the camera here. His name's Benny, and he seems to be wanting to be up on my lap whenever I'm working at the computer anymore. He hasn't been that way for a while, but he's come back around to it, and sometimes his nails get me. I don't know if you saw me wincing. All right, let me get back into this. So SPY, QQQ, we have reasons to be cautious. It wouldn't be a time that I would find myself in margin or anything like that. It'd be a place for me to actually build up that cash using such as the options plays that I have out there, and then just further investment into my trading accounts. So IWM, looking at the Russell 2000 stocks, and he's back again already here. Hey, Ben. We had a bit of a sell-off here so far. It seems that 218 seems to be holding us up for support right now, coming off of nearly an oversold position. As a matter of fact, just below 30 as per the daily RSI that we have on here. And really what I'm looking at for IWM is the potential for a cup and handle play, especially if those economic reports show us some near-term weakness in the labor market, and then followed by some sort of stabilization, cuts from the federal on the federal funds rate, more than what's currently expected of those 225 basis point cuts by the end of 2025. Things that are going to cause subdued inflation are going to be huge. Stabilization of the labor market, a continued strength in the GDP or the economic outlooks. Those are all things that are going to be great for the Russell 2000. We have the cup part of this. We don't yet have any information or confirmation that it's going to be a cup and handle. So it's just something I'm watching for as a potential, especially if we start to really trail off with the prices for IWM, because I think that that's really where we're going to see that potential for outperformance if it happens. So it's something I want to just kind of like an earmarked page, if you will, in my notes for what exactly could happen moving forward. That nothing that has come to fruition yet, but as we get this little bit of a sell-off, if it is something that is sustained and keeps going, that could form that handle type scenario. And then we're looking for that breakout moment to the upside where we really start to get that outperformance and maybe we push up towards the 300 mark for IWM for the Russell 2000 stocks. Bitcoin monthly chart, we can see that high top wick right there. Got a bit of a recovery today happening right now. So there we go. By the way, 91 to 92,000 seems to be about that limiting factor, if you will. And honestly, I think that it's a trend line off of what we had for the previous peaks for Bitcoin. So going back to these two peaks that we had, one of them in 2021 and the next one in late 2021, off of those two peaks, that trend line, let me see if I can put it up here for you. It's this one right here. This top one isn't a trend line yet. There's only 2 touches on that, but this is a confirmed trend line that we had where we touch the top, and then over here, notice the breakout moment that we had on a weekly basis up above this trend line. And I know this is a little bit busy to look at. Let me see if I can get you a slightly better view here for this one. So right here across the middle of your screen is the trend line that we were looking at. And check out the touch that we got, followed by the bounce that we got off of that. So we came down to about 91.3, and as of today, we're up to 95.4. Closing up above 95.292 is going to be huge for us to see further upside, hopefully pushing on that 100,000 mark. Now, mind you, that other trend line that I said wasn't in use yet, that's this one way north up here. That can be a limiting factor moving forward where we find at least near-term resistance if we get that recovery for BTC. Now, mind you, on the weekly chart, we've come down out of overbought status on Bitcoin. On the daily chart, we've definitely come down out of overbought. As a matter of fact, we went down into slightly bearish territory, potentially crossing back up above 50 fairly soon. So getting that cross momentum-wise back into bullish territory would be huge. Now, mind you, let me reset that view, and we're going to take a look at some of the moving averages that are on here. And let me take down the Bollinger Bands on this. They're not going to be helpful at the moment. And we're also going to take down the EMA. So just look at the simple moving averages. That 20 crossing the 50, if we fail to break that 50-day, that 20 is likely going to cross down over it. A bit of a death cross with faster over slower. And that could be something that sends Bitcoin down below that 92,000. Look for 85. And then after that, I believe 77 is that number from the technicals that I have on here. If instead we can break back up above both of those, that's really where we start to see the price get catalyzed and we start to take on that all-time high again. So that also leads me into XRP, which finds itself fighting the resistance area that we have that goes from about 211 to about 216 that I have on the chart for you. That's this spot right in here. Getting back up on top of that, if we can, that is going to be very, very firm support for us that we found buying pressure along. Let me see. We found it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times before we finally broke down below it. And so getting back up on top of that resistance that we have, which is pretty strong resistance. If it's strong support, strong resistance, getting back up on top of it is going to be huge for further price appreciation for XRP from where it's currently positioned. Bitcoin can help catalyze that. So if Bitcoin can get back up on top of its resistance, I think we're going to see XRP also do the same thing and get back up on top of its resistance. And then we have to fight its 20-day, which happens to be right around 227. But I think that would easily cave into being on top of the 50 and the 200. And then especially on top of this recent area of support now turned into resistance, getting back up above 216, a full candle above it and closing above it, especially on a volume type move with volume support. That's going to be huge for us for seeing further upside. And so where can we go with XRP? 271 to 277. If we get up above there, we have the all-time high to watch out for around 290. Up above there, we have some massive resistance from 318 up to about 343. So that could definitely be in the cards. And then up above there, based off of what we have for this bull pennant that's forming up here, if we can hold support and if we can break the top side resistance on this, if we can get there, then we have a shot that's going to take us close to $4 just based on the current technicals here. That assumes a few things. One, that we continue to have strength for risk assets, including the stock market. The stock market can continue to rally. If Bitcoin can continue to rally, that's going to make it a lot easier to have all of that influence at the back of XRP, really serving as a tailwind, if you will, rather than trying to fight market bias. So that's something that we're definitely looking for. We want to see subdued inflation. We want to see more cuts to the federal funds rate, especially the CME FedWatch tool would be a good place to look for that, to see what exactly the bond market is predicting is going to happen between now and the end of 2025, because lower federal funds rate, lower inflation, stabilizing employment, high GDP, those are all going to be contributing factors to bring further strength into this. Now, mind you, the presidential inauguration, also the passing date of January 15th, those can also be catalysts that we have. And this point that we have that goes on here for that bull pennant that we have on screen is about the end of January. So that would give us plenty of time in here to see that play out and really break to the upside between January the 15th catalyst, January 20th inauguration catalyst, and a few days afterwards for news to happen, maybe some positive crypto news coming out of the step into the presidency for Donald Trump, who has been pro-crypto. So we're going to have to watch for that. All right, guys, I'm going to wrap things up here. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.